The fortunate thing about us is whoever buys the chips is going to need our capacity. And if they don't have capacity, they're not going to have the chips. So we sit in a market neutral position to that problem.
Whichever chain establishes their protocol in at least one large company in each sector, you want to own that chain. Because as far as enterprise is concerned, they don't consider crypto on blockchain as enterprise software. It's inventory management. It's contract control.
This episode is brought to you by iTrustCapital. iTrustCapital allows you to invest in crypto as well as precious metals like gold and silver via an IRA. And this gives you huge tax advantages. So you can invest in over 90 crypto assets, including Bitcoin, Ethereum, XRP, Solana, and many more. You also get access to stablecoins such as Circle's USDC and Ripple's RLUSD. And as it relates to precious metals, you can invest in gold and silver, and these are the physical assets. So you're not investing in paper gold and silver. So on this platform, you can redeem the gold and silver if you choose to, and not many platforms offer that. Now, the big advantage to investing via iTrustCapital's IRA is the huge tax advantages. Many of you know you incur capital gains taxes when you sell at a gain. Well, you can minimize the effect of some of that by doing it via an IRA, especially if you have a long-term view on crypto as well as precious metals. And you can buy and sell crypto and precious metals 24/7. It's low cost and no monthly fee. So this is a great option to get exposure to these two great asset classes. And in addition, they have a great custody solution. It's called Premium Custody Account. So it uses institutional grade crypto custody, such as Coinbase Prime, which BlackRock leverages. iTrust also uses Fidelity Digital Assets as well as Fireblocks, and it's a closed loop system. So if someone hacks into your account, they can't withdraw funds. I believe this is the second safest way to custody your assets, right behind self-custody, where you control the private keys. And within the custody account, you could buy and sell 24/7. It's low fees. So this is a great option for custody of your assets, and you can sleep at night knowing that you're getting the institutional grade custodial services. So once again, two great products here from iTrustCapital, the IRA, where you can roll over your existing 401k or IRA to iTrustCapital's version, getting the huge tax advantages and the institutional custody. And folks, if you sign up with my link at itrustcapital.com/go/thinkingcrypto, you could get a $100 funding bonus. I have an account with iTrustCapital, so I encourage you to go check out iTrustCapital, learn about their services, and see if it's right for you. Again, you can get a $100 funding bonus by signing up via my link, which is itrustcapital.com/go/thinkingcrypto. Link will be in the description. Hi, everyone. Welcome into the Thinking Crypto podcast. I'm Tony Edward.
And I'm Amanda Whitcroft.
And joining us is Kevin O'Leary, who is a well-known entrepreneur and investor, chairman of O'Leary Ventures, and an investor on Shark Tank. And with him is Mohammed Bakhashwain, who is the founder, president, and CEO of Bitzero, which is a future-ready data center company with extensive experience in Bitcoin mining and the high-performance computing sector. Gentlemen, great to have you both.
Thank you. Thanks. Good to be here.
Mo, I would love to kick it off with you. Can we talk about Bitzero and your background and what led to the founding of Bitzero?
Absolutely. So my background comes from a very, conventional business, which is real estate. Done some creative structures around, closing the gap between finance and real estate through securitization for a while, alongside financial services and crypto. I was a part of a financial intermediary in Switzerland that focused on crypto products and services. We had an OTC exchange. We launched some DeFi products, did some advisory on tokenization, and that business went more towards the financial services, which lacked the tangibility of my background being in real estate. So that pushed me to exit that business and immediately find the perfect marriage, which is powered land and Bitcoin mining. So that brought the two things that I like the most or had the passion for together. So hard asset, real estate, power, and with an ownership model, which is back then a lot of Bitcoin miners were leasing their facilities rather than owning them. We went directly for an ownership model, thinking of those assets even outlasting, certain, bear cycles of crypto and also serving other industries, which we're seeing the fruits of today. That's how the business came about. We grew substantially over the past 4 years. We started with 7 megawatts in 2021. We grew the site in Norway up to 40 megawatts, kept growing our hash rate and optimizing our fleet till we reached about 4 exahash at some point. And that allowed us to have a lot of free cash flows in the optimal market cycles to go and grow our portfolio in terms of powered land and assets that allowed us to position ourselves with the demand for HPC and GPU capacity today in a very strong position in the market.
And Kevin, you're a strategic advisor. What drew you to Bitzero?
I'm really an investor. I don't have to give much advice to Mo. He's been executing quite well. So I look at it this way. I've been investing in crypto, digital payment systems for a long time. And there's been a fundamental shift in the market. I look at my investments in Bitcoin and Ethereum, for example, my only 2 crypto holdings in addition to stablecoins right now, because in the market, there's been a consolidation of what you need to own to be exposed to the asset class. So you get 97% of the volatility of all crypto in just 2 names. And so I've reduced my 27 position down to 2 there. Yeah. But the real theme that I believe is the right way for the next 5 years is to be in the picks and shovels of the digital transformation of the economy. Now, you could call that Bitcoin, digital payment systems like USDC that got cleared by the Genius Act, and then we have now the Clarity Act. But all of it is driven by one constant: power. If you don't have power, you're not part of it at all. And so if you're thinking about the diversification of risk, I don't care if Bitzero mines Bitcoin. That's not where the real value is. It's great that they get some additional cash flow. The fact that they have powered land permits, water, and pricing on those long-term contracts for power at sub 6 cents a kilowatt hour makes it extremely attractive for my portfolio, because you cannot find that anywhere. It's incredibly hard, because I've been to every state in North America, provinces, and every state in the US, looking for power at sub 6 cents a kilowatt hour, because that's the only way you're going to build anything to do with the digital economy. And here they are sitting with sustainable power, which is highly attractive now, very sustainable in the sense that it's hydro and nuclear. But in the last 90 days, something else has come onto the fore. Where is the power? Because if it's in the Middle East, where many data centers were built, that's not turned out very well. And so you have to put a new risk profile into that. If it's in a place where people are protesting and they don't want the data center, also not so good. That costs a lot of angst and delays and everything else. But if you've got something up and running already and you are in sync with the local government and you have sub 6 cents a kilowatt hour, you check the box on all of those with Bitzero. Highly attractive. Very, very attractive. And I think the market is shifting to that in terms of when you think about your portfolio. I consider my Bitzero equity position part of my entire digital portfolio, which I keep up to almost a 23% weighting. So it's a piece of it, and it's performed very, very well. My assumptions, and I think those of others, that got involved early, was exactly that. At some point, it all boils down to one common denominator: power.
Pardon the interruption. Hi, I'm Tony. I'm the host of the Thinking Crypto podcast. I wanted to ask you if you can please support the podcast by hitting the like button, subscribing if you haven't as yet. You can leave a comment below as well. And if you're listening on a podcast platform such as Spotify, Apple, or wherever you get your podcasts, please be sure to follow and hit the 5-star rating. I'll let you get back to the content. Thank you so much.
Mohammed, I wanted to congratulate you. As of yesterday, we read that you got approval officially to list on the NASDAQ stock market, which is great. Can you tell us, these areas of power, Kevin, that you're talking about, where you have data centers in and which ones support Bitcoin mining and AI compute?
So we're predominantly now based in the Nordics. We do have an expansion asset in the United States. Most of our operations and engineering and placement efforts are focused right now in the Nordics, where Kevin was referring to the hydroelectric energy in our Norway asset, which is mining 40 megawatts right now. That's now been placed with a potential tenant we're looking to bring on board. We're expecting that this tenant to basically partner with Bitzero on their European deployment. There is a condition precedent in the binding letter that we entered into with that tenant to be backstopped by a U.S. investment grade entity. We're working through and progressing that work stream right now with both the backer and the tenant. And we would be shifting the whole 110 megawatts that are coming online by September to GPU clusters as of next year. We will slowly phase out the Bitcoin mining to smaller sites that we have, such as our Rurvik site in Norway. We're going to phase out some of that mining activity to that site. It's about half an hour away from our site. So as the construction commences and we need to decommission some of them, we would be moving them gradually to the other sites to also maintain the cash flows, as well as move the balance of the equipment to another site in Finland. The second site in Norway could go up to 20 megawatts. We would need to relocate 40 megawatts. So a portion of it would go to that adjacent site, and another portion would go to our Finland site, which is much larger. It's 1 million square meters, just about 1 million square meters, 970,000. And the first phase of it is 100 megawatts, 80 up to 100 megawatts to be delivered during 2027. And it can ramp up to 1,000 megawatts. We're looking to commence the engineering and the line development of the 400 kV line to deliver the larger tranche of that power, the 600 to 800 megawatts, starting next year.
Can I just ask, how did you know to go to, admittedly, I know nothing about where the power is, and I'm just curious why it's not in this country, and why did you seek Finland, Norway? Why did you go in that direction?
So Norway, when I was screening sites back in 2018-19, was very attractive in terms of power pricing, in terms of abundant hydropower and surplus power that is being wasted and not even consumed domestically. So that presented a very strong opportunity and also presented less hurdles which others used to face in other jurisdictions such as the United States, such as Central Asia, and other hot mining locations, let's say, facing sanctions, political unrest, corruption, and instability in the grid, permitting hurdles. But we found the Nordics to be the complete opposite. The most stable grids in the world, the most clean grids in the world in terms of sustainability, permitting procedures that are fluid and transparent, processes that are, governed in a very clear way that mitigate the development risk and the basically the realization risk of the projects versus other countries. And Finland the same. They're really close to each other in terms of characteristics. And Finland is well known to be one of the best grids, power grids in the world, which is predominantly nuclear. Finland was one of the most nuclear-rich countries in Europe, along with France. France, again, you have all the other issues that make it complicated: dense population, permitting, and other factors that make it slightly more complicated than the Nordics.
Mohammed, how do you find a balance between Bitcoin mining and AI, supporting AI compute? Is it by demand from the open market? Also, the Bitcoin halving cycles. How are you preparing for next Bitcoin halving? And maybe there's a lot of demand for AI now, so you're putting more of your resources there.
Yeah, so certainly our short-term capacity is being diverted to AI compute due to the increased demand in the market, and also that's the best for our shareholders in terms of shareholder value. Bitcoin mining will always be alongside it in our operations. And we think that the manufacturers have kind of priced out a lot of players in the market that have shifted their capacity to AI due to increased difficulty that we believe is the result of the manufacturers turning their own miners on, which priced a lot of miners out of the market that don't have our power price. So our power price makes us resilient and profitable, even in strained difficulty times or increased network activity. But in terms of other miners that used to mine at 7, 8, 9 cents, those got priced out pretty fast.
Are you holding any Bitcoin on your balance sheet? I know a lot of miners do that, but they also sell some to run their operations, of course.
Yeah, we hold Bitcoin on our balance sheet as much as we can. However, we do use it to fund our operations and also fund our CapEx. So we self-fund from our free cash flows our CapEx on the sites. We don't, for the past number of years, we haven't raised capital to invest in CapEx. We've used our free cash flows to invest in CapEx and also purchase additional mining equipment. So we would immediately recycle the cash flows into additional capacity and or building out additional voltage.
Mohammed, how are you preparing for quantum? What's your quantum resistance plan?
You mean in terms of post-quantum security?
Right.
Or well, I believe quantum is gonna be first of all, to have a risk of quantum security right now is kind of unrealistic till the average gets their hands on that technology to use it in specific ways. I think we're years away. However, we do keep a close finger on the pulse where it comes to, post-quantum NFC chips and products and wallets, for example, that have post-quantum encryption, post-quantum NFC chips implanted in them. Like, I'm not sure if you're familiar with the new Trezor 7, Tony, that has a post-quantum chip, post-quantum encryption chip in it. That's something good to see that they're ahead of the curve. Like, I didn't expect it to come this early, but it's really good to see that, the industry veterans are thinking about that and are really ahead of the curve there. It gives a lot of comfort around the network and around the people behind the key functions, let's say, thinking about post-quantum encryption and security. From our operations standpoint, we sit as an infrastructure provider. So from an AI tenant standpoint, it's not on us to basically secure the network for them from a post-quantum attack or so. They would be running their own models. So we would sit at the rack level. We would provide them ready, cooled with the liquid cooling systems, backup power systems, generators, HVACs, redundant liquid cooling towers, and all the way to rack space. Everything to do with their running of the network and their training of their models or the inference they're running, that sits outside of our scope as an infrastructure provider.
Is there fear of because I remember a couple of years ago, there was always talk of a chip war or a chip shortage, when the latest and greatest rolls out and AWS and your big corporations have access to these chips. Do you ever have concerns of not having access to the latest and greatest chips? Is that a thing, or is that media hype?
So the fortunate thing about us is we don't need to worry about that. Whoever buys the chips is going to need our capacity. Whoever actually gets their hands on the chips will need our capacity. And if they don't have capacity, they're not going to have the chips. So we sit in a market neutral position to that problem. And the chip manufacturers, I think, started to worry more about capacity available to absorb their production than the other way around. So as Kevin said earlier, power is the currency in this circle.
So on that note, Kevin, there's been a lot of criticism about data centers. And I remember there being some about Bitcoin miners when they first started booming here in the United States. And I believe as a US citizen, the United States absolutely needs to lead in this technology. We're in a global competition. But how do we find the balance of addressing the concerns folks who live around these data centers may have, as far as impact on their lives and their community?
I think the industry's done a pretty poor job, and I include myself in that as well, of communicating the differences between data centers built 10, 15, 17 years ago versus what is being built now. Um, and primarily in Virginia, where a lot of this misinformation started from. Virginia's first data centers were built right inside communities. They caused the price of electricity to go up in local communities, the library, the school, the hospital, et cetera, as much as 30%. That was built off the grid. They consumed tremendous amounts of water using very old turbine technology. And the cooling systems of the chips themselves also wasted water. It wasn't like a closed system like a car radiator. So today's technology is advanced so far from those days, yet nobody understands that. So when you roll into a place like Michigan, which has gone through a lot of litigation, in fact, Michigan, West Virginia, Mississippi, Tennessee, and Texas, pretty well every proposal to build power and or data center compute capacity runs into a massive amount of litigation. And in some cases, policy, in the state of Maine contemplating policy to not even build any data centers. In the last 2 weeks, there's been a lot of investigation and a report released yesterday afternoon by OpenAI about the interference of foreign money coming in and using, obviously, free speech platforms like social media and everything else to agitate with propaganda about what's going to happen in your community when a data center is built. And they don't talk about the thousands of jobs or the millions in taxes paid, or the fact that these things don't spew heat or sound as much. In some cases, they don't even use water because they're air-cooled turbines. So the challenge now is project by project to explain to the constituents who are going to reap the benefits. A gig of compute power costs $15 billion to build in any state. And so you have all these governors wanting to get that 15 billion because the tax base goes up dramatically. And then all of this propaganda spilled into their jurisdiction about why it's going to be bad. And I think that balance has to be fixed. And a lot of effort now in terms of PR is starting to happen regarding this. It doesn't mean it's going to get easier, which, to my point earlier, I want geographic diversification because Norway doesn't have that problem. Finland doesn't have that problem. So Bitzero is not facing any of those headwinds. I also have a project in Alberta, same thing. I mean, I want to avoid those problems. And in a way, and this is probably just serendipitous, I mean, the company couldn't have known what was going to happen. The most advantaged powered land, at least in my portfolio, is Bitzero. There's nobody calling me out protesting. And permits are there and the power is there. It's sub 6 cents a kilowatt hour. I mean, this really goes to the theory of diversification as an investor. My best performing asset right now in this space is Bitzero. And I think the story is just beginning. I mean, the uplisting of the NASDAQ is great, but it's really about the more the market looks at what the triggers are for success, the more they're going to look at Bitzero because all you have to do is get powered land with permits, fiber, and you're like a menu. And every hyperscaler is going to come to you and shop at your deli. That's what's going to happen. And I've encouraged the company to make sure that they have a process because what they have has been proven in the last 90 days to be incredibly valuable. There's no drones flying into Norway right now.
Do you feel some of the concerns are the larger macro theme of AI is coming to take away my job? AI is, going to take away parts of my life. So there's this, maybe more education is needed. You alluded to that, but there's this theme, that people are a bit worried about AI.
Yeah, there's two camps, and I agree with you. That's a very good intuitive question. One camp says AI will take away all employment, and then the robots will eat the babies. that camp. And the other camp says, but wait a second, we need this compute. We need the compute capacity to pursue all of the opportunities that AI has presented already. One of the reasons the Dow remains near all-time highs is the productivity in the S&P 500 from the first innings of using AI in every sector have been very productive and margin enhancing. But you start to think about democratization of education, for example, or research in biology or medicine, or productivity in business or defense, and predictive analysis of weather, and all the things that are the potential. And when you talk about, sending people to Mars or building a community on the moon, a lot of that analysis is driven by AI, and that's going to create hundreds of thousands of high-paying jobs. And so the idea that it takes away all employment, I find ludicrous. Everybody loathes change and uncertainty, and I totally get that. But I don't think we want China to get ahead of us on AI compute, because as you're watching this war play out in the Middle East, I'm just talking about defense at this point, and 48 hours ago, 2 helicopter pilots were rescued in the middle of the ocean by a drone boat, a 24-foot drone boat. First time that's ever been done. The servers that drove that were undoubtedly in the United States, with high resolution GPS technology from satellites linked to it to find their beepers, slow down yards away from them, let them get in it, turn around and deliver them right back to the naval vessel hospital that they went to. So I don't want that in the hands of an adversary. I definitely want that in the hands of, the North American economy. And in order for us to keep up with China, and, Mo talked about generating power and putting in more capacity. China put in 400 gigawatts of coal burning facilities to build out for their AI compute in the last 18 months. How much did we build in the US? 0. Because we were met with protests and no permits and delays and all that stuff. And I think this administration is starting to understand what's going on and pushing back. And I think the AI community, the compute capacity and everything else is being discussed at all 5 of the hyperscalers who are the primary tenants of all of these facilities. And I certainly talk to them all. But I think they've just discovered Bitzero, and that's why they're knocking on the company's door. Because what Bitzero has, I can't find anywhere else. So, and that's what I do. I mean, that's what I do. I find these opportunities early. That's my strategy. And I'm not always right, but it's part of a portfolio. And now it's incredibly valuable, given what's going on everywhere else. But I think we will get through this. I think this negative narrative about what AI is and its potential, we'll get through it. And I think policy will change in terms of speed to permit, path to permit, and we'll get this done. But meanwhile, Bitzero's 2 years ahead, maybe 3.
Mohammed, to wrap things up with you, what's on the roadmap? What can we expect from Bitzero?
Executing on our sites, slowly phasing out our Bitcoin mining as we bring on our new tenant. We're looking to we're always screening the market for similar opportunities and sites that tick our boxes. We pride ourselves that we don't just pick up any site that we look at. We only step into sites that we consider by our measure at the premium side of the market. We've seen that, and it's been proven to us time and time again on every site that we walk into. We might have passed on a much larger number of potential megawatts than what we secured, and that's just due to the site's qualities and surroundings and local environments. So that's basically what we're focused on right now.
Thank you for sharing that, Mohammed Bakhashwain. Did I say that properly?
Yeah, actually, pretty well.
Perfect. Founder and CEO of Bitzero. Thank you so much for joining us.
Thank you.
Kevin, you mentioned a bit about your crypto portfolio. You mentioned holding some of the tokens as well as the picks and shovels. Are you also looking at tokenization and getting involved with any type of tokenized assets as well?
You are onto, and I agree with this line of discussion, because here's what I think for the next 24 months in terms of the investment allocation on crypto, because I talked about reducing my overall exposure to a lot of the chains out there, a lot of the tokens, because after the October 20th last year meltdown, the majority of them, in fact, 99% of them didn't recover. And there's a reason for that. The analysis done at the sovereign wealth level, the guys I work with in indexing, who've never looked at crypto and weren't planning to put it on for 1 to 3% allocation until the Clarity Act had passed. But you recall in October, there was a lot of momentum on the Clarity Act, and the assumption was it would clear before the end of the year last year. Didn't happen. But nevertheless, at various conferences, they showed up for the first time, and we're talking about, what was the model portfolio for allocation on crypto. And lo and behold, when they did their research, even before the correction, if you want to call it that, 97% of all vol is just two assets, Bitcoin and ETH. So BTC and ETH. And the reason that matters is they also have enough liquidity to put in 100 million, 200 million at 10:05 in the morning and take it out if you want. So you're allocating to, let's say, a 3% weighting. All you need is those two. That's incredibly sobering. But tokenization is also part of the Clarity Act. And the tokenization of securities is extremely interesting, but it requires blockchain. Now, we've been talking about blockchain being integrated into the S&P 500 for 14 years. 14 years. And if you go and talk to any CEO or CFO or compliance officer in any of the public companies, they will give a nod to admitting blockchain has merit for contract management, inventory management, logistics, in terms of product movement, registration, all of that stuff. But none of them are using it. And why? Well, they say the same thing. Let's stay on the topic of tokenization. If you're an issuer and you issue shares or debt, you could actually issue a token if it was compliant and trade it on any number of exchanges. It would change the efficiency, the transparency, and the cost of compliance would go down dramatically because it's all on the chain. But they won't do it yet. And there's another problem, because I spend a lot of time with these guys, and I'm very interested to figure this one out. And I'm not the only guy trying to figure this out. Let's talk about financial services, one of the 11 sectors of the S&P. It is one of the sectors that all other 10 use. The other that could fall into that category would be energy. You don't have a business without input, power. So let's just take those two sectors. If energy decided to standardize on one chain and all of a sudden finance standardized on another chain, and let's say consumer goods, where you move a lot of units through inventory, then through sales, went to another chain, that would be immensely inefficient. So my thesis is this: whichever chain establishes their protocol in at least one large company in each sector, you want to own that chain. And I think you can understand why. Because as far as enterprise is concerned, they don't consider crypto on blockchain crypto at all. It's enterprise software. It's inventory management. It's contract control. It's whatever it is. But you, as the owner of the tokens, or, whatever way you want to invest in it, are going to benefit for the incremental geometric growth of transactions on that platform. And if you go talk to these different, not to name any one in particular, but right now Ethereum is winning because it's doing most of the transactions for financial services and stablecoins. Probably, over 50% of today's trades on ETH are going to be just on USDC or Tether or whatever else. So that's the opportunity. If you can figure that out, and I'm going to try, that's going to be the next big thing. It's going to be huge, because you want to catch it right when clarity clears. Because the minute that happens, boom, You're going to see all of this activity occur at the S&P 500 level with compliance officers. Does that kind of make intuitive sense? You see where I'm going with that?
Absolutely. And to your point, it seems the direction the puck is heading in. All the banks, stock exchanges, investment firms are putting stocks, equities, commodities, a lot of these assets, eventually real estate, on chain.
That's it. You've got it. It's right there. But for 14 years, we've been saying that as a community. 14 years. And you wonder why everyone keeps banging their head into the wall on it, because it's not compliant yet, but it will be soon. Because a lot of the friction on the Clarity Act, which I'm obviously spending a lot of time in Washington on, is this idea of interest on stable coins or awards or whatever you want to call it. You put your $1,000 in a savings account, maybe you make 1.2% or 1.3%, and at least that should be available to someone who takes a stable coin, sticks it in their wallet, because it's backed by T-bills or any kind of, 92 or less day duration asset that's approved within the bill, which would yield right now about 3.4%. So I think we got to get that resolved. The banking lobbies are trying to stop the issuance of any kind of interest on USDC that comes out Circle. I'm full transparency. It's that topic you brought up is actually there's a conference here tomorrow in New York exactly on this, and it's all attended by institutional investors. And I'll be keynoting, or one of the keynotes there, on this topic. The correction on all of the chain products and tokens, it was brutal. I mean, some of them down 88%, and then the volume dries up, and then, it's a chicken and egg problem. You've got to get an S&P 500 company to use the chain, and they're all looking at each other saying, "What chain are you going to use? What chain are you going to use?" And until we get that worked out, which I think will happen maybe in the next 3-4 months. So I talk to all of these foundations pretty well every week. And I always ask the same question: what do you got for me in new clients? And I don't mean some gaming company. I'm talking about the real deal. I want is they'll all say, "Oh, I got this game out of Korea and they're using it, for payment systems." Who cares? That's not going to move the needle at all. And the other challenge they're going to have is this: when you see the price of Bitcoin on a business cable anywhere in the world, it's brought up at the same time they give the forwards on, or the indications for the Dow, the NASDAQ, the S&P 500, and then you see BTC at 60,000 or whatever it is. And 1 in 10 times you see Ethereum. You never see anything else. So whoever the new chain is going to be, as the story rolls out about them being adopted across, these different sectors of the economy, they're going to need a marketing budget of about $250 million a year just to get the word out. And not many of them have that much money. So, because if you want to buy a ticker around the world in the morning at 7:30, when every investor is watching what the market indexes are going to do, you want your chain on there. And that's $250. So, when I talk to them, I also talk about that, and it's sobering.
Kevin, do you think that the Clarity Act will pass this year?
I had an update last night from my, I've got some pretty good contacts now in 50-50. We weren't planning on war in October, like this. So that could be a distraction. However, it's crucial for financial services to resolve this, because it's a competitive weapon in efficiency in the economy. I mean, it's going to be so much more efficient to use digital payment systems the way you can right now. We have started to use USDC for cross-border transactions on assets. Switzerland will take it. France will take it. Denmark, Finland will take it. Vendors within those countries will take it. And it's completely compliant. And, you see where the transaction began, where it ended, and it's a fraction of the cost of a Fed wire or ACH transfer, and it's better. And so we usually do a test amount. If it's going to be $1 million transaction, we'll send 50, test, and then send the rest minutes later. But ETH is slow. It could take minutes. And that's, one of the challenges we're going to have in speeding that whole thing up. Because if all of a sudden every sector is using multiple transactions, including at the consumer level with digital payment systems as a competition to credit cards, because the credit card guys are going to get into this too as a vehicle. The loyalty rewards are worth something, so they can attach that to a different way of paying as opposed to using, cash. But it's all of this happens quickly when clarity clears. And I think the authors of it, the staffers, and even back to Gildebrand, when she started 5 years ago, and Haggerty, they were the spearheads for this. And then with the whole crypto crazy cowboy period and the FTX stuff and all that, the idea was this is a powerful financial tool. And so the days of the crypto cowboy are over, and now we look for policy.
Yeah, great response. I know you have another interview after this, so we're just going to wrap things up with rapid fire questions just to get to know you a little bit more. Early bird or night owl?
I'm both. I get up pretty early. I'm really into this longevity thing, so I've completely modified my diet, my exercise regime, my sleep. I track it using Aura. This is a fantastic device. And the amazing thing about longevity is there's a lot of different theories and everything. And I've tried all these experimental things like EBOO and Lifespan is a lab in Dubai. Really amazing. They do dialysis on your blood. 4.5 liters of your blood's removed. It's cleansed. You can see the impurities. It's really, my goodness, you can't believe how much crap is in your blood. And then they ozonate it, then oxygenate it, and then hit you with 5 billion exosomes. And so the theory of that is that it reduces inflammation all over your body. Exosomes go right to the site of inflammation and go to work. And it's remarkable. 14 days later, you feel like you're 14 years old. But the effects are only about 28, 38 days. So I went back to them and said, look, I know it's expensive, but I want to do it every 30 days. I'm going to come over here and do it every 30 days. They said, can't do it. It's experimental in some ways, but we're only going to do it every 3 months. And so everybody that's tried it is in my boat. They just can't wait to get back there. But really, it's sleep and it's exercise and diet. Trying to get at least 60 grams of protein in a day, not so easy. But here's the challenge. I don't do drugs, I don't smoke, but I like wine. So it turns out that if you drink wine 3 hours before you go to sleep, it wipes out your REM sleep. And you can see the results in the morning when you download them from your ring. It's very frustrating. So I went to the community, of which there's millions of people tracking their sleep now, and I said, what's the solution? And everybody came back with the same solution. Drink your wine at breakfast. Actually,
Very European.
And heavy at lunch. They don't drink at night, and it may be that they figured this out a long time ago. But you really have to cool it on the booze too. And a lot of people don't drink at all anymore, as you're well aware.
Yes, that's very true. Although Europeans are outliving Americans now, so I do think there's something to wine in the morning. Window seat or aisle?
Always the aisle. Access to get up and move, have motion, particularly during a flight that's more than 3 hours, is crucial. You got to get up, you got to walk the aisle. You got to do it should do it every 20 minutes. Because it's brutal on your body to sit there for 6 hours. And what about the ones like when I go over to the Middle East, 21 hours. Yeah. You go to Asia, 22 hours. I mean, you really have to think about the aircraft as a vessel that you're a passenger in, and you got to do some of the activities. So it's that's that answer.
Text, email, or call?
That's a great one. So I can't use email anymore because I'm getting about, I don't know, 1,200 an hour. We've tried every spam system possible. Even AI can't differentiate what's relevant and what isn't, what's signal, what's noise. So I've moved to text, and I'm using all the platforms for the majority of business. I carry 3 phones with 4 numbers. So there are various degrees of security. I have a phone that uses a lot of the geo-locked apps, and it thinks it's in Phnom Penh, Cambodia. So I've got TikTok on there and all that stuff. I have another phone that just has a UAE number that I use for security medallion. And that's very functional, so I can see our servers there and look at our bank accounts and see cash flows any time of the day or night. And then I have another phone that has a very, very, very secure system on it, and one number for my immediate family. And I know when that rings, I got to answer it. And then one for my CEOs. Every company I'm involved in or debt or equity has that number. And I always tell them, don't ring it with good news. I don't want any good news. I can see it. I want the bad news first. I want to be first to know whatever it is. And so when that number rings, it's never good news. And in any day, it's amazing. And I say this to every entrepreneur, the ebb and flow of the good and the bad news by the hour coming at you. Phone rings at 5:30 in the morning. We just got sued, $8.2 billion lawsuit for some product or whatever. And it could be bankruptcy. We're going to have to hire lawyers, everything else. And then 30 minutes later, we just got a takeout offer for 14x, free cash flow. And you're the largest shareholder. We need your approval. I mean, that happens in 20 minutes. So utter desperation, utter euphoria. And my new strategy is just stay in the middle, because no matter how bad it is, something great's going to happen and you only have to wait 20 minutes. I mean, that's how my life is now. And so it's always, it's so crazy that you might as well try and find a constant and in your head figure out, is that signal or is that noise? What is that? Don't waste your time on noise.
Yeah, that's great words to live by. And I think the last question, if you could have dinner with any person, living or dead, who is it?
Would be Bismarck. I'm a big history buff. Bismarck was the most powerful man in Germany. He shaped nations. He was behind the scenes everywhere in that sort of First and Second World War period when countries were being formed and nations were being diminished or cut in half and all the rest of that. He was a masterful negotiator. I learned from him. It's such a great thing to be a history buff, to go back, because some things don't change. Great negotiators are great negotiators. Doesn't matter if you were in the Roman times or you were in the First World War or you're today. When there's a dispute, and in modern times, I look at a plethora of companies, everybody's in litigation. That's part of business. But both sides want something. How do you get there? How do you get the emotion? See, Bismarck got the emotion out of it and said, what's the common interest? How do we get there? And he did all the negotiation. Back then, there was no cell phones. You had to ride a horse, or sometimes, whatever they had for transportation. It involved a pigeon, carrier with a parchment, whatever the hell it was. He'd figure out how to get the messages or cross the message or leak the messages. Every strategy he had worked. And ultimately, he would resolve these disputes and for the benefit of both sides. And because he had such a success doing that, he rose up to be the most coveted advisor. And that's what you want to be in business, an advisor investor.
I love that. Kevin O'Leary, the name speaks for itself. Truly, like Tony said, an honor to have you. Thank you so much for coming on and joining us.
I really enjoyed it. Take care. Thank you.
Thanks, Kevin. Thank you so much for tuning in. Please hit the like button, subscribe if you haven't as yet. If you're listening on a podcast platform such as Spotify or Apple, please follow and leave a 5-star rating. Thank you so much.